What's going on, family? Thank you for rocking with me tonight. I appreciate you. If you're watching this live, thank you for coming on a Friday. If you're watching the replay, please let me know your thoughts and thank you again for watching. On this video today, this live stream, I want to touch on a few things. I want to talk about how it is desperate times right now for sellers. We'll go over an article talking about that. For buyers, I don't have to really go too in depth about it, but we will. You buyers know how hard it is right now. And for the stock market and how it's going to have an impact on both buyers and sellers. I'm also going to bring on Ortez Fields. He is somebody I work with, somebody I trust with my own loans in this mortgage industry. He's a mortgage broker with Affordable Partners. And we're going to dive into that and answer any questions you all may have. Thank you all for joining. Eddie, thank you for joining me back. Brad, Danny, what's going on, brother? Danny is a team member of mine. If you need any assistance, please reach out to Danny. Touring the Carolinas with Danny Mullen. Amazing person, extremely knowledgeable regarding real estate here in the Carolinas. We will make sure you are taken care of. So without further ado, let me bring on Ortez, and then we'll jump into those three topics I talked about. What's going on,
Hey,
Ortez?
hey, can you hear me? How you doing?
I can hear you. I can hear you. Can you
Awesome,
hear
awesome.
Ortez? Put a put a thumbs up in the chat if you can hear Ortez.
Hey,
Hey,
mic check.
Catherine.
Yeah, everything should be good.
I think we're good. I think we're good.
Okay, awesome, awesome. So yeah,
So again, we talked backstage a little bit about what I wanted to discuss today. First, I want to talk about desperate times right here with the stock market, and if you have any input on why it plunged as it did today.
well, because I was watching a couple of videos, and one of the analysts were kind of mentioned something about how Apple and Microsoft can kind of save the day, but they're forecasting that even if their numbers do show that they're gonna, they've got to be outstanding numbers, but it's really just with what Powell said. And even I believe Tesla had some good numbers, I think yesterday or the
Yep.
day before yesterday, and people were selling off their stocks with good numbers in Tesla. Like it's starting to
So
become like an
real quick,
inevitability, right? Oh,
I'm not
okay,
sure
go ahead.
everybody know what Powell said. What did he say recently?
Oh, so he basically said like it's going to be a 50 bips increase in the in the costs on the market, right? So like bips, and for those who are new or don't know what that means, is BPS. It stands for basis points, right?
Yep.
And BIPS basically affects the cost of things, right? And
Yep.
as a course correction with costs going up, rates eventually follow. So it's not something that directly affects the rate, it affects costs of things. And with them increasing the cost of those things, interest rates will then, as a course correction, come behind it. So that's when you see when people start talking about cost of things going up, rates will then eventually follow suit. So, but yeah, he said as come May 4th, I believe a 50 bit increase is going to happen. And then someone said that even in June there might be another one coming too. So
Give me 1 second. I'm about to pull something up real quick.
mm-hmm.
I think that's on here where so yesterday you are 100% correct. Jerome Powell mentioned how we are fighting inflation, how there's going to be a 50 basis point hike on May 4th. And he said, don't be shocked I would not be shocked if there's one in June as well. And you had another Fed president. So Jerome Powell, he's the Fed chief, he's over it all. But then you have different Fed presidents, and you have another one coming out saying she's in favor, Loretta Meister, of the 50 basis point hikes, which you just mentioned. And then she said, perhaps multiple times.
Yeah.
So we have that going on. We have that in the background. And when that was said yesterday, it spooked the market. It spooked Wall Street. And Wall Street ended up taking their money out of Wall Street.
Yeah. So, well, just to, I'm not, trying to correct you.
Oh,
Well,
no,
I
no,
mean,
you're good.
just no. So she's in favor of the 50 basis points hike, but
Yeah,
not the 75 basis points hike,
that's correct.
right? Yeah. So she's all for it, and like you said, it's course correction, or I heard a good phrase, it's demand destruction,
Yep.
right? So they're basically trying to curb the demand that's going on out there to then correct pricing, because when the interest rates were as low as they were, prices were going through the roof, and even then it was kind of making to where as people things were unaffordable, right?
Mhm.
So in turn, they do this bip hike, but then down the line it's going to make it harder in certain situations and scenarios for the everyday Joe, right?
Correct.
So yeah, it's about to be like,
So,
I don't want to say the R word because I don't like that
oh,
word.
no, I've already said it. I've said it on this
Oh,
channel. I believe recession is coming. There's really, I think the soft landing that the Fed is hoping we're going to have is unavoidable. I don't think we're going to have a soft landing. We kept funds rate low for too long. We had them unnecessarily low when the economy supposedly was doing great. And then we didn't really have a recourse when it wasn't doing great, and because they were already pretty low at the time. Right now, the Fed fund rate is at 50 basis point, I believe. And one thing I want to highlight that the Cleveland Fed Mester said was, I would support at this point where the economy is a 50 basis point rise, not the 75, like you mentioned, and maybe a few more to get to 2.5% level by the end of the year.
mm.
How do you feel about that? So right now we're at 50 as a federal funds rate. We're at 50. She's saying, I think we need to get to 2.5 by the end of the year. They have six more meetings, a few more 50 basis point hikes, a couple 25 basis point hikes, and we're right there.
So I mean, to okay, because I see this comment, I gotta address it to Sarah.
Yes.
Would it send the interest rate well over 7 with what she's talking about? Potentially, right?
Yeah.
Getting into that 2.5 range, that could potentially, because all it is, like I said, is course correction, right? So when they attack the cost of things, the natural progression is then the interest rate hike. So like, man, it's hard to say because I understand why. It's like I said, it's the prices are getting outrageous, especially in the homes. But then you're essentially scaring people in the stock market, right? So,
Exactly.
and I think one of the analysts said, like, when the stock market is going down and then interest rates are going up, it's just like on a collision course for pretty much disaster.
I don't think
And
we've never been at this point in our economy. We've never, well, just come out of a pandemic. Well, we're still in the pandemic. Let's not forget
yeah,
that. Still in the
yeah,
pandemic, where basically we're not fighting a war, but we're funding a war, however you want to look at it.
hmm
Um, and you have all this demand for housing and record low supply as far as
yeah,
inventory.
yeah.
So we've never crossed this barrier. We've never seen this. So nobody knows exactly. We're all pontificating, reading tea leaves. However, we're going off of what is told to us, and trying to play chess and play it out, and advise everybody watching what the best recourse may be.
And that's funny you say that because historically, like we have a phrase in the banking world, when the world's on fire, it's great to do mortgages, right? So when the world is in an uproar, i.e., a war,
Mhm.
historically the rates have been going down, like in the past, right?
Yeah, in the
But
past.
now this is unprecedented waters where, I mean, uncharted waters, excuse me,
Yep.
where the rates are going up and up as we have something going on that within one of the powers of the, the country, I mean, the world, right?
Yeah.
So, like you said, we're kind of throwing, stones to see, throwing the spaghetti at the wall to see what sticks, to see what will happen. All I can say is, and this is what I tell all of my clients moving forward, or it has in the past, always get ready. Like if you're ready, if when the opportunity strikes, you won't have to get ready. You will be ready,
Exactly. Exactly.
right?
Yep.
So whenever someone asks, well, I need to buy a house tomorrow. Well, you should have thought about that like 12 months ago, right?
I've been telling people that they want to buy new construction now, and I'm like, they want to move in what, 4 weeks, maybe 2 months. And I'm like, it's not how it works right now.
Nope. So you got to get ready early and now. So hopefully, you know, God forbid that it gets any worse, right? But now's a good time to get all of everyone's ducks in a row because, like you said, we kind of don't know. Like, there's no there's no historical data to see how we will get out of this, right?
Yeah.
So for all we know, tomorrow it could be another, like, you know what I'm saying, it could be another 25 basis points,
Yep. Yep.
So all we can do is hope and pray that we get everything in line first and foremost, so that way we'll be best situated down the line to get what we desire, right?
Now, one thing I also want to touch on, we talked about how the Fed wants to crush demand destruction, you mentioned.
Mm-hmm.
Based by raising interest rates, you're making things more costly. So not as many people can approve, get qualified for that home loan or that car loan, different things like that. So then hopefully, because the demand goes away, prices will level off.
Mm-hmm. That's correct. Yep.
However, as they do that, and this is the challenge, and what I hear in the back end is, so they're trying to help Main Street by leveling off prices, getting prices to level off, and hurt Wall Street, which we've seen them do in the Dow. I'm about to pull up this article real quick. The Dow took a huge dip today,
Like 1,000 points, right?
about 900 points. Yes, yes. Give me 1 second. I'm trying to. All right.
And then, yeah,
Here we
Sarah,
go.
you're right. You're right in your comment.
Sarah, let me put your comment on here. Sarah has a few comments.
Yeah, Sarah's active.
Let me shout out Eddie real quick. Eddie Smallhorn. He is, I won't say better half, the equal half of Christina Smallhorn. Christina Smallhorn, the real estate whisperer. I believe she is one of my mentors. Go check out her channel. Eddie is the man behind the scene and putting everything together. So thank you for joining us tonight. Here we go with this article. Dow plunges 900 points for its worst day since 2020 and falls for the fourth straight week. But what most people don't realize is that while we want to help Main Street, I believe we want to help Main Street as a society and hurt Wall Street, as the Dow takes a plunge, the investors are they're gonna take their money out of the stock market and traditionally, historically, Ortez, where do they put it if they take it out of the stock market?
They put it in real estate.
They put it in real estate. So you're taking away demand from one side, from Main Street, but then you have Wall Street investors with all their money coming in, putting it in real estate to hedge against inflation historically. And
Yep.
they're not, are they concerned about interest rates at all?
Nope, because they typically buy in the four letter king cash.
Yeah.
So I mean, they're basically just putting, like, so they're taking it out of the stock market, which is, we know is a roller coaster, right? And
Mm-hmm.
they're putting it into something that, for the most part, is an appreciating asset, right? and they have the time to sit on a property and rent it out for multiple years, to whereas 5 years down the line, once the stock market does auto correct itself, they can sell that property and then take those profits and put it back into the stock market and ride that wave again. So essentially what they do, they put it into a safer investment, but they take away the stock of, like, the inventory that real home buyers want to have. Like, so it's a
So it's
yeah.
basically the people that are still in the game to buy a home that can technically afford the market, the prices right now. They're going to be competing against they're already competing against investors, but more so now as the stock market takes a plunge.
Yep.
Which,
Yep.
so I tell everyone to get in on the property ladder sooner than later, because historically, smart money is in real estate. You get to put it there, you get to park it there. Um, the tax code is written for people that, one, own real estate, two, own businesses.
Mm-hmm.
So you can't really take advantage of the tax code until you have both of those. And then we're in America, so I figure you need to take advantage of everything that they put in place for us to take advantage of.
Mm-hmm.
So we talked about buyers being desperate, interest rates going up, stock market investors desperate, they need to get out of stock market, they're going to go into real estate. They're going to
Mm-hmm.
put their money into real estate. Now let's quickly touch on, before we go into scenarios regarding purchase price and what it may cost someone.
Mm-hmm.
Let's talk about sellers real quick and how I believe they are being desperate right now.
HS90 said, "Will houses be on the market longer?" This actually kind of touches onto Sir's point, right? Because the seller gets desperate, right? Now, what will happen as a course correction is the seller is going to lower the price, right? So what happens is, they missed out. Sellers now have missed out on the over asking, getting 50 grand over what they listed it for, because they waited till April instead of pulling the trigger in January, right? So as a course correction, what they're going to do is they're going to be desperate enough to whereas they're going to lower the price to whereas that course correction happens, where really what the house is worth is what they're going to get for it. And that's the price point in which they're going to be. So, you'll have a few out there that will still try to get top dollar, but as you put in the comments, it will be on the market longer, and eventually they will have to lower that price point if they want their house to sell. So you're probably going to see a lot more Zillow listings, to whereas it's been on the market 2 weeks, 3 weeks, 4 weeks.
I have to laugh real quick, because we're complaining, like sellers complain, and we're even talking about it. Like, you may see it's going to be crazy. House is going to be on the market for 2 weeks,
Yeah, right.
whereas in a normal world, we've just been spoiled. The past 2 years, 2.5 years. In a normal world, a normal market, at least where I'm at, and in the greater Charlotte area, and you're here as well,
Mm-hmm.
is, I mean, 60 to 90 days. That's typical. Like, if you get something within that time, offers within that time, you've done great. It's just in the market, the time we're in right now. If houses, and this is where, let me put the article back up. Where Redfin, we'll get into it, but this is where sellers are getting desperate. Those sellers missed out on all the buyers, that was a buying frenzy and everything like that. And only thing they hear in their head is, well, my neighbor sold, in October and got 40 over asking. And so I want to set the market and go crazy. So what ends up happening is they overpriced their home to begin with, because they thought we were in the same market, or they weren't. Either one of two things: either they were educated and their real estate agent told them we're not in the same market, but they're like, you know what, Sorry, I was gonna say the F word. You know what? Forget it. We're gonna go ahead and still. I appreciate your advice, but I want to still shoot for the stars. And the homes that are fixed up, done all the way, they may be able to still garner multiple offers and go above asking and everything. But that average home, that home that needs work, that property is going to sit on the market if it is overpriced. Last year, that property would have gotten multiple offers and sold for over asking. Not right now because there's less buyers on the market.
Yeah, and there's always that saying, like, sellers are always attached to their house, right? They think their house is worth more than what it is, but in reality, you kind of want that enticement of, like, if it's really at market value and more people can get in at market value, it will create that demand again, to whereas you could get that bidding war that you had, a couple of months ago. But that's something that that's like a chess move, right? Like, I'm gonna set it at market and see how many, fish I can get to bite at that bait, and see if it'll cause that, that bidding war. Because you never know. It may come in to whereas you get that offer that they'll guarantee over the appraisal or whatever, right? Because they're going against 5, 6, 7 people. But if you set it too high, you'll be lucky to get one, right?
So,
So
real quick, we get sellers dropping their price, and I don't want to seem like it's every seller. The news makes it seem like every seller,
mhm.
but it's roughly 1 in 8 sellers cut their list prices during the first 4 weeks. So you're still talking a very small percentage of sellers lowering their prices.
But that goes back to what I was saying about sellers being so attached to their home,
Yep.
right? That's the, I wouldn't call it arrogance, but it's like, it's sentimental, right? I completely understand. Like, it's your home, blah 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 blah. But you got to think about it realistically as a seller. Like, if I still got the paint and the fixtures from 1990, right? And I haven't updated a single lick of it. Buyers want that move in ready, that not having to put much in it other than you just pay get the loan and call it a day, right? So just to be realistic about that, that's something you have to take into consideration. And a guy like yourself, you would let the seller know, like, hey, like, I understand you want X, Y, and Z, but like, having linoleum is kind of dated, right?
Yeah. Yeah. Yep.
So,
You
but
got to
but
be
yeah, that
realistic in this market.
yeah, exactly.
You got to be realistic, and some real estate professionals will just be happy to take the listing and be like, oh well, I'll do whatever, and then hopefully they'll reduce the price. Your goal is to create the competition and get the most for your home. And like you said earlier, I believe you get the most by pricing it correctly to begin with and get people to compete. And then you have the potential of going above your asking price. Whereas if you come out the gate too strong, then you're chasing the market and people are going to be wondering, what the hell is wrong with that property? Why do they keep
Yeah,
lowering that price? You
yeah.
don't want to be
Like, is
that
there a
property.
foundation? Yeah, if there a foundation issue, like,
Yeah.
why is it sitting there? When actuality is just the person was just too. They shot, like you said, they shoot for the moon, right? Chris, is it Miss
Yeah.
Holmes, right?
I
If
definitely want to
things get,
talk. Go ahead.
they
I
get,
wanted to get
if
to this
she's, if
question.
things gets too crazy, do you think something may be put in place where investors cannot bid on a home until 30 to 60 days after a regular buyer has had a chance? That would be lovely, but it's a free market,
It's a
right?
free market. You got HUD homes, like HUD homes, government homes. They actually have that stipulation in there. For the first 30 days, investors can't bid on them. Um, we haven't really seen too many HUD homes recently, but back in what I was investing in HUD homes in Greensboro in '09, '10. Um,
That makes sense. That's from the recession, the crash, right? So,
exactly, exactly.
yeah,
And
yeah,
and talking about Greensboro, the triad homes were 30, 40,000. Um, so yeah, so then I had to wait, that requisite amount of time before I could bid and start purchasing them. Um, but in this market, no, it is a free market. We live in a capitalist society, and it's all about supply, demand, and who brings forth the best offer,
yep.
and that's who's gonna win. Now, what I have seen, to touch on your point as far as limiting investors, I have seen a lot of HOAs or more HOAs. I won't say a lot because it's not quite a lot just yet, but more HOAs recently in the area have been limiting investors as far as if they can purchase homes in that community. Now, I can see why buyers would be happy about that, but some sellers are irate about it because they're like, "What do you mean I can't sell my home? This investor just offered me 20,000 above ask, but I can't sell it to them." And that's because they put rental caps on communities, to where it sounds good in practice when you're a buyer. If you're a seller, that doesn't sound too good because you're lessening the competition, and not even lessening the competition, but you're hurting your bottom line as well. So it's
And
a gift and a curse.
that's kind of, they're kind of, because if I'm not mistaken, and
Mhm.
somebody, if they know the guidelines, they can correct me, because I think I remember it's kind of like what condos do, right? When there's a condo questionnaire,
Yeah.
like if X amount are renters, certain places won't lend to them, and certain condos try not to have that many renters because of that same stipulation. So yeah, that, I mean, that's actually kind of cool. I get what you're saying. Like, it's cool for the buyer, it's not for the seller,
Yeah.
but at least the HOA somewhat is looking out for, like, making sure families are in the home trying to own the home, and not an investor trying to create,
Now,
collect rent off
I
of it.
won't I won't go that far as the HOA is concerned about people like the
Well, it
home.
sounds like, it sounds nice, right? In
What they're
theory.
concerned with is the perception is homeowners take better care of the home than renters. So the HOA is like, well, we don't want to come have to deal with this nonsense with all these quote unquote renters that don't care about the home. Again, that's their perception. And they're like, well, if we have just home owners in it, they will have a sense of ownership and pride in that ownership.
Yeah, exactly. Let me see.
DW, are there areas where you think investors wouldn't want to buy in the Charlotte area?
Where nice
Um,
houses will be affordable.
So I think in the Charlotte area, that is a broad area, and right now, I think you have to go 45 minute. And affordable is a relative term, so I don't want to. You tell me what you think affordable is. I'm thinking, in order to get in the $300,000 range, personally, I believe you have to be not even. I don't believe it. I know you have to be about 30 to 50 minutes outside of the city to get that range. If for a single family home, in the Charlotte area, if you want something in the Charlotte or the directly surrounding suburbs, you're going to be at least in the fours, and that's even pushing it right now.
Mhm.
Um, yeah, there was a community. I even put it on one of my communities to watch for videos. Park Crossing, I believe, by Pulte. They've been marketing it for a year, talking about coming out in the 300s, right in South Charlotte. They changed it. They're about to release, and for the last year and a half, it was a sign 300, starting in the 300s. They changed it in the last 2 weeks. They're starting off in the 500s. So I was amped and hyped about that community because I'm like, this is gonna be great. Um, but then they saw the pricing in the community in the area. They're like, why we shoot ourselves in the foot when we can garner 500?
Ashley said 4.99. Hey, Ash.
Oh no, she just gave me some money. Thank you for the
Oh,
super
oh,
chat.
that's
I appreciate it. I appreciate it. I appreciate it, Ashley Rose. Thank you. DW 3 to 400. Yes, I think you have to be about. Reach out to me. Reach out to my office 704-775-1236. I can help you, or I'll put you in contact with Danny Mullen. He's a team member. He was on here earlier. Um, and we can help you find something in the greater Charlotte area. But just know you're going to be about 30, at least 30 minutes outside the city. So let me get off of this. All right. So the last thing we wanted to do, we wanted to jump into some numbers, Ortez, if
all
that's
right. I
cool
got
with
you.
you.
Yep.
I wanted to, because the interest rate has has gone up drastically in the past 4 months, past year. Um, I just wanted to do a worksheet as far as what pricing is versus what it was, not even pricing, but as far as monthly payment, mortgage
Hmm.
amount, for a DW, this is the breakdown right here. For a $300,000 home, what would the mortgage payment be right now with today's rates?
Hmm.
And the only other variable we had as far as debts, I believe, was a $500 car payment,
Yep. Yep. So,
right?
so the scenario, I drew up basically $300,000 at three different interest rates. We'll show what it looks like in February when, before things went nuts, what it is today, and kind of taking a slight bump up, projecting what the future might be in the next month or so, right? And then you're correct. We only factored in one other debt, which being a $500 car payment, right? And then you wanted me to break down like what that looked like as far as what someone would need as far as income wise to be comfortable, right?
I
Where
did. I
we're
wanted
not
to see as far as
okay.
income wise, what the income you will need to qualify, and then what that monthly payment would be as
Okay.
well.
All right, got you. So let me know
And
whenever you're
I'm
ready.
going to try
Hmm.
to write the numbers down on
Okay.
a on a notepad, so people can see. Bear with me. This is my first time doing this, and my handwriting is awful. So y'all might beg me to stop writing, but
All right.
let's
All
do it.
right. Let me know when you're ready, boss.
I'm ready.
All right. So if we're looking at a $300,000 house, right? Back in February when rates were in the three, so let's just call it a 3%, right? All right. So at 3%, the principal and interest payment. So we can only really talk about principal and interest, right? So principal and interest payment at 3% on the $300,000 loan amount, right? The principal and interest was 1265. All right. So right up there,
Yep.
P and I. So principal and interest. So P and I. Now, mind you, everybody, that's just principal and interest. We're not talking taxes, insurance, more PMI if you have to have it. This is just on that a loan amount itself, right? If we were just doing straight interest rate, right? So now, same scenario. If we're looking at a 5% interest rate, which is what basically the rates are at right now, but assume that it's just five flat, right? Because 5% is it's kind of generous now. They're kind of in the five and a half, but I just did it at 5%. That principal and interest payment is now 1610, which is a difference of $345, right? Now, if we're going to look at that same scenario with a 6% interest rate, excuse me.
Give me 1 second. Sorry, I was
Okay,
looking at the
no problem.
comments. I saw
No,
Craig. Congratulations, Craig, for locking that in. That's solid. That is solid.
yeah, very solid, very solid.
$300,000 loan at 6%.
Yep, at 6%.
Okay.
Now let's call it 1800 because it's 1799 and some pennies. So let's say 1800 principal and interest. Now,
So that's not
so
including taxes and insurance.
that's not including taxes and insurance, right? Not including it. So that's just your principal and interest payment. So whenever I hear someone say, "Oh, I'm gonna wait," oh, this, that, and the third, from February, you went from under $1,300 for just a principal and interest payment to $1,800 because you wanted to wait, right? And that goes back to the fact when you said you want to get in on the ladder, right? Just get
Yeah.
in on the ladder because now that puts you at a point where at least you're in the game. Now, with the interest rates going the way they are, you know, it's it's making it to where people can't even get in the game, right? So now, do you want me to go into breaking down like the income, like
I do. I
for
do.
okay,
Definitely
so
talk about the income, but let's talk about Craig just mentioned, left a comment at his 315 with PMI and escrow. He's roughly at $2,000 a month.
yeah, and that's a $300,000, 300,000, right? So
Yeah.
I live out. Wait a minute, just closed on a property in Texas today. Nice. Live out in Waxhaw. First time catching on. Welcome,
What's
Tony.
up, Tony?
Welcome.
Thank you for joining us on a Friday. I know you could be doing much. All of you could be doing much better things on a Friday evening. But thank you for joining me. Thank you for rocking with us. I appreciate it. And congratulations on closing on your property. That's congratulations. So please, yes, let's talk about real quick income. What's your income have to be able to even qualify to get that?
All right. So let's see. So in that scenario, right? So let's go back to we'll add some caveats so folks can kind of have an idea so we can see what it is. So let me know when you get back over to that drawing board, right?
Yeah.
All right. So in these scenarios, like I said, they don't include taxes and insurance, but roughly, I'm only using our area, folks. So please don't hold me accountable to these numbers. I'm just using generalities here in the Charlotte area, right? So for generality purposes, sir, let's assume taxes and insurance combined is about 300, right? All right. And then you said the other debt that they would have would be a car payment of about 500, right?
500 a month. Yep.
Yep, 500 a month. Now, folks, this is assuming that moving forward, the only debts I see on your credit report and that I'm going to know is the fact that you have a car loan and your mortgage payment, right? So in this
Not talking
scenario,
about student loans
yeah,
or anything like that.
not talking about credit cards, student
Okay.
loans, other installment debts from errands or whatever. Not even talking about that, right? So for this scenario, at the 3% with those two debt, with the mortgage and the car note, right? The person to be comfortable. Now, mind you, folks, I'm a loan officer, whereas I want to make sure you're not robbing Peter to pay Paul for a mortgage, right? So I factor in comfortability as far as wiggle room. So at 3%, someone who made 55 grand can afford this scenario. And that's if the loan was at 3%. Income would need to be about 55 grand.
55K.
Yep. The scenario at 5%.
No, I'm just saying everything the same at 5%.
Yep. Now the income shoots up to about 64 grand. And that's yearly income, folks, not monthly, yearly income.
So, to those of you who watched my other video earlier this week, I talked about the median income here in the United States being 44,000 this year. So the median income is 44,000, and we talked about we did a quick scenario, but I wanted a professional to get on here and break things down. So here we are. We talk about 5% to get a $300,000 loan with those caveats, the car payment and all that.
Yep. And
64.
then at 6%, the last scenario, you need to make just about 70 grand. Now, as we said, this caveat is just on the scenario that Sir had me put together, right?
Yep.
What you want to think about, and for all the people who are watching, the debts that we really look at from the mortgage side, right, are things you're contractually liable for, right? So anything you put your name to paper for, so credit cards, student loans, car payments, things of that nature. Those are the debts that we really look at. We don't look at, like your rent or gym memberships, Netflix subscriptions. We don't care about that stuff, right? But the stuff that we see on your credit report is the stuff that really matters in determining your debt to income. So I always tell folks, as you're preparing to buy a home, right? I know savings matter, things of that nature. But the biggest thing, the biggest boom, bang for your buck is making sure that your debts are as low as they humanly possibly can be, right? Because the more space you have in your debt to income, the more house that you can afford, right? So really focusing on now, because I know, and I always tell folks, it's easier to control your debts than it is to go into your boss's office and ask for a raise.
And I told you all earlier in a previous video, and I said it a few times, is if you want a bump in your pay, you might have to get uncomfortable. I know you may be at a certain company for 2, 5, 10 years, and you might get that 2%, maybe even 5% raise. However, right now is the time of the employee. We have employees have a lot of leverage right now with the great resignation and everything. So I say put feelers out there, Career Builder, Indeed, LinkedIn, and see what the competition may be offering you to do the same exact job you're doing. Because if I'm correct me if I'm wrong, Ortez, you can switch jobs so long as it's in the same industry or you're doing the same thing, and it still counts as far as your 2-year work history and stuff.
It all depends on the program,
Okay.
right? Like for example, because we know conventionals was ruling the world, right? So conventional, so long as you have a full-time salaried position,
Yep.
day one, we're good, right? If it's FHA, if it's a change lateral, like you said, like if I'm a architect at one firm and I go to be an architect at another, that's seamless, right? Just need
Yep.
the offer letter, we're good to go, right? But if you change fields completely on an FHA, they want to see that you're in that job for at least 6 months, right? So if you go from being like a chiropractor to now you're uh, uh, a bank teller, right? Something that's completely different, right? They will want to see that if we're going FHA. But like I said, it really just depends on the rules per the program. Obviously, they gave me a call, let me know the scenario, and I'm going to tell you, like, hey, this is the program that would best fit your situation. So that way we can navigate it seamlessly to whereas we're not having any hiccups. Like I read Craig's comment, and yeah, there's
Yep.
some lenders that,
Oh, let
like
me
I
put it back
said,
up there. Sorry.
oh no, it's good. There are some lenders, right, that an offer letter didn't work for me. Yeah, so there are certain lenders that have their stipulations. It just really just depends on the lender and what program they try to put you in. But like with me, sir, like we work with different lenders to whereas we
Mm-hmm.
have different programs. So you know, having a loan officer who knows the rules and who can talk through your situation, and that's another thing that I'll tell anybody who watching the live stream. We as loan officers want to close your loan, but you have to give us the information. So feel free to share. We're so not judgmental. I don't, I'm indifferent in regards to what it is that you have going on. But if you let me know up front, I can game plan with you and we can tailor make
Exactly.
we can make the process,
You don't want to find out
seamless
right
for you.
before
Closing,
you
right?
have to get it all tied in and all that. Let you know up front.
Yeah, exactly. So letting us know, being prepared and honest up front, that could save a whole lot of trouble, and as far as that's concerned. So what about down
Give me
payment and
one
how does
second.
that
One second
work?
before we answer that
Okay.
question. Um, Tiffany Howard, I know she's been a subscriber to the channel. Thank you for watching, Tiff. I appreciate it. Thank you for coming on this live stream. Congrats on starting a new job. I appreciate that. That's great news. Um, and when you're ready to, please reach out to us. Ortez, I will put his contact information in the description. If you don't mind, if you want to give him your contact information now,
Oh, okay.
feel
If
free.
anybody's out there listening, my cell phone number is the best way to get in touch with me by phone. 517-881-8352. Service the greater
Say that
North
again. I'm sorry.
Carolinas.
I'm slow.
Oh,
881.
8352.
Perfect. I'm putting it into the chat.
Okay, perfect. That's probably the best way to get in contact with me as far as, your mortgage options, things of that nature. We can discuss scenarios and what's the best way to go about basically making your home ownership dreams possible, right? Let's see. Do we want to touch on what Travis Schwartz said
Yes,
or
yes, yes.
okay,
What
so
about
and
down
then
payment?
what about down payment and how does that work against someone who has all cash? I guess is the I'm trying to
If
figure
you're
out what the
competing, if I'm understanding the question correctly, Travis, feel free to let us know if we're not. Is if you're competing against somebody all cash, um, it helps if you have a significant down payment, just because it gives the seller some security. A lot of times, this is just my experience. I can't say a lot of times, but my experience is when I have somebody selling, they want to sell to an individual. They want to sell to a person. They don't want to sell to a corporation. It's just sometimes the corporation makes the offer too good to refuse. And it takes away when they come with all cash. it takes away the guesswork, and if they are dependent on their home closing to buy their new home, it takes away that hesitation and trepidation. So, but the more down payment you have, when you're if you're competing against an all cash offer, it eases the seller's mind and it allows them to feel more comfortable and confident in your offer to move forward with you.
Yeah, but to relay, I mean to not necessarily combat, but
Yeah.
all
No.
cash, man. All cash is, hey, we closing in a week. Like, I'm just be honest with everybody out there, because I was in that scenario when I sold our last house, right? All cash, and it was just, hey, that's something that as a seller, your eyes kind of, I mean, as a seller, your eyes like light up, like all cash, no still, like no appraisal,
Yeah.
like, and
Yeah.
it's over
Yeah.
asking. That's
Yeah.
it's a hard thing for a seller to pass up. I have seen it though. I've seen those happen. It'll be like some of the nostalgic sellers, right? They really want
Yeah. Yeah.
it to go the way they want it to go, but an all cash offer, especially if it's over asking, that's something that's hard for a seller to really walk away from.
Yeah. Well, one, I wanted to take this moment and say thank you. Thank you for the support. Thank you for the super chat. I definitely appreciate it. And we will continue to be bringing you valuable content. Well, content, and we hope it's valuable to you in moving down here and just planning and just hopefully just educating others on. I want you to buy a home. I want you to be wise as you do so and make the best decision for you and your family. But as somebody that didn't have a stable, I didn't have a home, my parents didn't own. So as somebody that didn't have that growing up, I want that for everyone. Not only have that sense of security, but able to build that financial base, and knowing that when you're making your monthly payment, it's yours. You're paying towards something as opposed to paying somebody else's mortgage.
All right.
Um, Real
Touch,
quick,
because it's a couple questions in here that I see and I got the answer to. So
yeah.
throw
Which
up
one? You talking about Craig?
Craig, yeah, throw up Craig, right? So Craig, for a refi, right, on an FHA loan, if you just recently got this FHA loan and it's a 30-year FHA loan, the PMI stays on it for the life of the loan, right? So in order to get that PMI removed, you thus then need to get out of it into a conventional loan. You need to refinance out of that FHA loan. So what happens is, when you know you have 20% value or equity in that property, what you want to do is reach out to someone who can refinance you. I'm not sure if you're here in North Carolina, but I gave you my number. So when you're ready, give me a call. And what we'll do is we'll get you out of that FHA loan and put you into a conventional loan. I simply, if you know you have the value there, and you know that the loan to value is at least 80%, then we take you out of the FHA loan and throw you into a conventional mortgage.
Now, real quick, I gotta plug you real quick. You're saying just North Carolina. I know your company services other states as
Yeah,
well.
yeah,
You're
yeah,
limiting yourself to just North
yeah.
Carolina, but
So
your company it services
yeah.
other states. So you're not just
So right
limited. So
now,
give them a
yeah,
call and they can help.
yeah. So and then let's see, throw up E Owens Stetch. I think that's
Give me one
Stetch. I
second,
think.
real quick, real quick.
Oh, E Owens
Um,
Teach. I'm so sorry.
Teach. Daryl, yes. Union County. I love Union County. Please reach out to me. Kellerton Place, Stallingsbrook. Those are just some communities, but you have Monroe, you have Indian Trail, Stallings. Union County is amazing in the greater Charlotte area, and they have some of the best schools in the area as well. So you can't go wrong with Union County. And right now they are in the $300,000 range, but I saw a release. It hasn't been public yet, but they're going to be raising their prices to the low fours.
Okay.
Most of the communities. But here we go.
All right. So E Owens, right? So the only explanation I can really think of, right, is your taxes and insurance, right? So in Ohio, because I'm from originally from the Midwest, I'm from Detroit, so don't hold it against me. I know Ohio and Michigan, we butt heads, right? So, but Ohio, just like Michigan, from what I remember, I believe the taxes are a little bit higher, right? So taxes and insurance, when you factor that into your monthly mortgage payment, could possibly be higher than what the average is down here. Because I know when we moved down to North Carolina, the taxes and insurance are dwarf, the bat like at the same price point as from when I was in Michigan. So that could be another thing as to why your pre-approval amount was a little bit lower than than the scenario that I used, right? And then also the other thing might be they might be pre-approving at a forecasted higher interest rate potentially, because that also is with the interest rate right now going as haywire as they are. I have to make sure I stay in touch with all of my pre-approvals because it fluctuates now, and
I've
that might
told
be
some people
something.
that if you were pre-approved, what 2 months ago, you may want to talk to your mortgage broker,
Yeah.
and make sure that you're still pre-approved, you're still good to go, because that you might not be in the same price point. Um,
Yep.
Real quick, I've been meaning to do this. Let me see if y'all.
Oh wow, Scott. Yeah, that's awesome,
Scott,
Scott.
thank you
Yeah.
for the super chat. I appreciate it, and the super sticker. Wow, that's humbling. Thank you.
Let's see who else.
Scott
Scott. I have a home.
in New York.
My house in New York brings in passive income. So Scott, that's a question you probably have to ask me offline. We're gonna have to look at some like taxes in that regard. Just to see how it would be advantageous for you in your situation. As Sir put it in the chat, just give me a call and we can see
And
how that passive income can help you out.
And I know some people earlier asked about the Triad area, Winston-Salem, and I see you're moving to the Triangle. I have team members throughout the state. Actually, we just actually it's not under contract yet. We put in an offer. Team put in an offer for a property right outside Winston-Salem earlier this week. Hopefully, we hear back tomorrow regarding if it got accepted. And Bree Bowling, I'm gonna have her on the channel hopefully in the next coming weeks, but she is my team member in Raleigh. She is absolutely amazing. She's killing it. She got two properties under contract this week. So yeah, I'll bring her on the channel. But throughout North and South Carolina, we can help you and find and put you in contact with an agent that will more than help you and make sure you're taken care of.
Okay. What other questions we got here?
We got
Craig, I think Craig asked a quick one right before that, right
Yeah,
after Scott.
Waxhaw is it's tough to find anything under 450 in Waxhaw. Waxhaw is a very nice area, but it is tough. It is tough.
I see. Shoot back up to Craig real quick. Just he got one.
Right here.
Yeah. So Craig, it can be a combination of both. It can
Yeah.
be the appreciation of your home value as well as you paying your mortgage monthly and lowering the principal that way, right? So it can be a combination of both. Um, and I mean, hey, depending on how much you put down, uh, and the appreciation of the area in which you purchased could be, a couple years based on how we're seeing the market. But obviously, with the demand destruction they're doing, that increase may not happen as soon as we seen in the
I
past.
mean,
So,
I've seen some people in the past year they've gained 20% equity. So it's not unheard of. It just really depends on your location and where you are to make sure we can if you can get that. Thank you, Pat. I appreciate the comment. See if we have any more.
uh,
We're going on 53 minutes. We're gonna try to wrap this up right around an hour. Actually, I didn't plan on being here an hour. I plan on being here 30 minutes. But keep the questions coming. As long as I can keep Ortez here with us, I will.
yeah, give me 1 second. Let me just turn on the light because it's getting a little dim in here. Give me 1 second.
All right, there you go.
All right. So what else we got?
Give me 1 second. Wait, before we get to your question, Travis, this Daniel asked first. Currently, and she's looking to retire.
Please don't.
Yeah, don't
Please.
retire. Do not retire during your loan process. We want you to get credit for all the income you can while you're buying your home. Now, after you get your loan and you close, I have clients doing this, buying in retirement community. But after you close, by all means, do what you need to do. But do not retire while you're in the process of getting a home because you just messed up your debt to income.
Yep. And
You got anything else to add on that, Daniel? I mean, Ortez. Sorry.
no, I mean, really, like you can retire day 2 after you sign those documents, but do not retire mid-process because that'll throw off debt to income. No matter what you have documentation for the retirement income, just tell mom to hold on. Just hold on.
I had a client in the DC area. Sheila, if you're watching this, I'm talking about you. Is She wants to retire so bad. She just can't wait. She's just waiting for her home to close. Like as soon as it closes, I'm retiring the next day. So she's just waiting. So sounds like your mom's in the same boat.
He said her income increases. Don't do a single thing, Daniel. Just tell mom to ride it out. Just ride it out. Who else? Travis,
Give me one sec right here.
500K.
Yeah,
Yeah. Yeah. I mean, that's 5%
yeah.
conventional. Yeah.
You can do that.
Yeah.
You can do that. Just make sure that's not all like your money because you're gonna have closing
Yeah.
costs and all that associated with it. So just make sure like that's not that's not all your funds.
Yeah. Yeah. Yeah.
You
So,
want to
yeah.
make sure you have some reserves.
Mm-hmm. Let's see. Any other questions? Reason why we're coming down. Okay, yeah. Also in Ohio, insurance are hot. Yep. And I ain't a move our way. Reasons we're coming down. Well, hey, come
Come
on
on
down. You'll
down.
enjoy this
Come on
weather.
down.
Yeah.
There's a lot of when I lived in Huntersville, it seemed like all my neighbors had that Ohio State flag in their yard. I went to Georgetown. I'm a Big East guy. Y'all do y'all Midwest thing, but yeah, I'm not even really game with the ACC. Although UNC had a nice run this year.
Yeah. Let's see. Anything else? All right. Yeah. No, that's looks like anybody else got any more questions? I'm not sure. I don't see any more.
There you go.
Winston's where he's
Yes,
looking.
Winston's where you're
Okay.
looking. Yeah, feel free to reach out. I occasionally take stuff up there, but it's more so going to be a team member because I want to make sure you get with an expert in that area. By no means am I an expert in all of North or South Carolina. The Charlotte market is my primary market, and I do know a lot about Raleigh. But even me, when I'm talking about Raleigh, I rely on Bree because she is my expert and my team member there. So I can put you in contact with somebody in the Winston and the Triad area.
All
Give me
right.
one second. Got just here. I had a question about my closing costs. So with that said, just here, that technically that is correct. It's not their job to provide details about your loan, but that is why it's not necessary, but it's just prudent to make sure your real estate agent and your loan officer communicate. So everybody's on the same page and knows what everybody's doing. And because you don't want to go into contract for a home and you think you're approved, but the HOA or whatever it may be, closing costs, and you just lost your earnest money and due diligence.
Yeah, no, and that's it's funny because me and Sir talk like at least once a day, and I tell them like, yeah, they're gonna be able to cover their costs, things of that nature. But yes, so details of the loan typically fall on the loan officer, but like Sir said, it helps when we both are in constant communication, so we can basically make sure like, hey, this is what the costs are probably gonna be, et cetera, et cetera. But your loan officer, if you just direct that question to them, they should be able to explain in detail, break down the loan estimate of how your closing costs came to be what they are. So that, would be a better question for your LO, but it's always nice if, the real estate agent could break it down. So,
Give me one second. I got a couple people. I'm gonna get to you, Starlet. Uh, should you
mm-hmm.
lock in your rate this far out? Talking about so they're building a home, won't be built until November, December with possible delay due to supply chain issues. Should they lock their rate this far out? What are your thoughts?
Well, because I'm not like, and that's what we had this conversation a couple of days ago when
Yeah.
we were talking about builders. And that is, when the builder's lender has that capability, um, you know, that's not a bad option to explore, right? Because with the way the market and the volatility is right now, it could be a possible thing that makes sense for you. And that's obviously on something that's a new build, right? So by all means, that's something like you and your LO, like if the loan officer that you're talking to that's not with because builders have their own lenders, right? They have their preferred lender. So they have that capability to whereas they're able to do something that certain loan officers can't, right? It's just how their structure is set up with their lender, right? So if that's something, Mr. V, that you want to explore, by all means, just talk talk out the pros and cons of it as far as like what's it gonna cost to do such a thing, and if that's a cost that you're willing to bear up front. And if it is, by all means, go right ahead. If it's not, and because ultimately it's just a gamble. It's a gamble of whether or not you want to. It's cost versus trying to predict the future. And since nobody can predict the future of where the market is going, like I didn't see in February, rates getting this ridiculous. I knew they
No,
were going up. I knew they were
nobody
going.
knew we were gonna go to war either. Basically,
Yeah, so I knew they were going up, but I didn't know that. I would have never guessed in a million years it would be this outrageous, right? But that's why we live, and that's why we wake up every day, because every day is a different story, right? Things can happen in
so
the blink of an eye.
the only rates have only raised this fast one other time in our history, and I believe it was in '94. I could be somebody in the chat if you want to correct me if I'm wrong. But my research earlier this week, actually, when I was prepping for a video, showed me that the rates, 2% in 2 months, 2.5 months. Only other time was 1994. Let's go to Starlet. Now, she asked how long you'd wait to change jobs after closing. I don't believe you have to wait at all. Like your closing is done, so you don't have to worry about it. So long as, I mean, obviously you want to make sure you can make your mortgage payment and do all that, but it's not going to impact your mortgage because you already have it. You already closed on your property. You're good to go.
Purchased the home 2 months ago in a small city.
I'm sorry. I think here we go.
Yeah, and it's slow over there. So moving back to the city. I'm a single guy. Hey man, you better you
Hey,
better yeah, you better enjoy that land, man. I'm telling you. Boy, look.
yeah, I would. What I would do is I would, if you can, try to rent that out. I wouldn't try to sell anything right now. But no, I'm with you. I'm with you. When I first moved to, um, this is years ago. When I first moved to Huntersville, there wasn't as many options in Huntersville as there are right now. And I came from uptown. I lived in a condo uptown, and I hated it. It was like this is not the look. But
In the condo or the
no,
Huntersville?
Huntersville. When I
Oh,
left, because I was lived uptown. I could walk to everything. Um, Season tickets to it was the Bobcats at the time. It was good. Walked to I practiced law. Walked to the courthouse. Some days, sometimes it was too hot to be walking in a suit, so I just drive 3 blocks. But no, I totally feel you, Carl. But try to make the most of it. Give it some time. You only been there 2 months.
yeah, right. It might grow on you, man. Especially if you got some land. Start a garden. That's what I want to do. For real, I want to start a garden for real. Let's see.
Linda. Currently in contract in Charlotte for a new build and experiencing delays. Have you seen trends and delays in the Charlotte area for new builds? Most definitely. Throughout, not just the Charlotte area, but throughout North Carolina. I have clients building throughout North Carolina and in South Carolina, but all of the builders are experiencing some type of delays. I've actually had a major builder can't get drywall, can't get drywall. Um, Still having delays with some electrical materials, windows. There's a couple other things, but those are the three that I've heard just in the past week. That I'm like, oh, I thought we were past windows, but no, windows are still a big thing right now. And then I was shocked when I heard drywall, and I'm like, you are one of the biggest builders here in the state, and you can't get drywall. How are you? How are you? How are you building? So yeah, no, there are definitely serious delays, and that's also contributing to the price increases because the builders want to, they want to make a profit. They don't want to cut their profits. So they're passing that on to you, and so long as there is the demand there, might not be as much, but so long as there's enough demand and people are still going under contract, they're not gonna. They might actually, I don't even see them lowering prices. They may add other incentives as far as appliances, blinds, and stuff like that. But they're going to keep coming up with these high prices.
which is sad, but
It
yeah.
is sad. It is sad. However, only again, I was talking to them, and a lot of the reps they are with us. They're like, it's sad. We've seen people get priced out because some communities started off in the twos and right now they're in the fives. I'm talking about 200,000 and now they're in the $500,000 range and they are flabbergasted. But then I talk to clients coming from up north or out west and they see a $500,000 home and they're like, this is still very affordable. And I could put money down for this and buy a rental property. So it's all perspective, I guess.
Yeah.
Um, Ian Mountain, what's the average mortgage payment on a home? It's a lot of
Yeah.
variables.
Yeah. Yeah. That's because, like, okay, so like I said, like you said, variables, whether or not you're gonna have PMI or not, what the interest rate is, what the taxes and insurance are, because a 400 to 450 house in Huntersville isn't the same as a $450,000 house down in the Palisades versus in Union County versus in Winston Salem. So that's a
And like,
very
yeah, down payment and all that stuff. They got
yeah,
this whole
yeah.
bunch of
So
variables in there.
yeah, so that's a very open-ended question that would need to be kind of narrowed down as far as like that's concerned.
So, last question. It's going to be the last question. In
All
the
right.
process of purchasing, it's been a few months and you keep getting outbid by cash offers. Any recommendations to make your offer stronger? Um, yes. Do you have any? Have you seen any? Do you have any suggestions?
Uh, um, man, I told you. Well, we just talked about this. Like all cash,
Yeah.
close in 2 weeks. Like that is like I said. The only thing that I've seen, I saw this one scenario. It was an open house. The clients were an older client, like couple. The people talked to the couple and their offer wasn't even the highest by any stretch of the imagination, but because of the fact they were the only people that talked to the people and got to know them, they accepted
Yeah.
their offer. So the only thing I could really see is like I said, that's something of sentiment, right? Like to whereas you took it upon yourself to make yourself stand out to that seller. So the only thing I can really suggest, like I said, that I've seen, like, I've seen the whole letter thing, but, talking to them and meeting them during the open house, that's, going above and beyond to make yourself stand out from just here's money. Right.
Yeah.
So, but if it's just paper versus, like a mortgage versus greenbacks, that's hard for a seller to really walk away from. So I guess my only recommendation is if they're there at the open house and you get a chance to meet them and talk to them and tell them your story, that probably be the only thing I could suggest to make
The
your offer
challenge
stronger.
the challenge is if I don't know exactly what the homes you've been bidding on, but chances are there's not going to be an open house on that home. It's going to be
Okay.
gone real quick. It's not even going to be time. Time isn't even going to allow for that. I have a video. I can try to find it and then respond to this in the replay chat. Different things to make your offer stronger. But what I would say is to direct your attention to a different type of property. If you're looking at homes that just hit the market, that's typically the ones that gonna get the cash offers immediately and all that, and you get outbid for. But if it's been on the market for, it's weird saying this, 7 days or 14 days, I say go after those properties more so because cash buyers and other buyers have already had a chance to see it, potentially bid on it, and they didn't already. So just open your view as far as properties a little wider and look at homes that have been on the market for a little longer. If you keep getting outbid by cash offers, I don't know anything about your particular situation. You might be able to give more and do, I don't know, and if you're in North Carolina, give more in due diligence, lessen your inspection period. I'm not saying do not do inspections. Definitely make sure you do inspections, but you can, as opposed to making it a 2 week inspection period, make it a week inspection period. You can get everybody in, get everybody lined up. Um, so that's what I say. Broaden your field as far as your search, and then also see if you can increase your due diligence, and then also lessen your inspection time because no seller if you're competing against cash offers, the cash offer is probably buying as is regardless. And then you with a loan, you're going to have, your appraisal, inspections, and all that. There's more hoops that they have to go through, have to worry about. If you just lessen that inspection period, and depending on the price and the neighborhood and the community, every home is a little different. Consider, I'm not saying do it definitely, but consider waiving or doing a appraisal waiver, or saying that you will pay the difference. But it all depends on that community, that home, what the purchase price is. That's not always a wise decision to do so.
That's good.
So thank you everyone for rocking with us tonight. Ortez, can you leave your information one more time so people can get in touch with you?
Oh yeah, perfect. So yeah, like I said, my name is Ortez Fields. I'm with Affordable Mortgage Partners here in Charlotte, executive loan officer. I can be reached directly at 517-881-8352. That's my cell phone number, best way to reach out to me. And then from there, once we have a conversation, we'll get the email, and then I'm emailed too. So, but the phone number, best way to get a hold of me, so we can discuss their options, everybody. I want to set everyone up for success. So
Thank you all. You all enjoy the rest of your Friday evening. Enjoy your weekend. I'm gonna try to do a video to come out on Sunday, and I'll talk to you all later. Thank you.
all right,
Bye.
thanks, sir. Y'all have a good one.
You're welcome, brother.